What is going on, guys? Good morning. It's your favorite mortgage lender of Del Guami, Got Mortgages. I hope everybody is having a blessed day. We are going to get right into it. Got quite a bit to talk about, really kind of just how the market has been playing out. As most of us are aware, interest rates have been on a downward trend. We continue on this trend. This week is going to be such a big week in terms of just the updates on the Fed. We got some revisions with the QCEW, which we are going to go over. That's a quarterly consensus on employment and wages. And holy crap, did they come out with some crazy numbers when we talk about revisions on the inflation market, revisions on the employment market. The employment essentially came in at 911,000 jobs were overstated. I mean, you're talking about close to a million jobs that they basically were like, hey, yeah, we kind of basically screwed up and overestimated. And, that comes to mind with the BLS report, just kind of showing how off the numbers are. You know, being off by that much, we're already seeing cracks in the labor market, but it's even more evident now that the labor market is actually weaker than it was first anticipated, right? So we're going to jump right into it. QCEW, like I said, for the last 12 months, from March until essentially of 2025, they were over 911,000 jobs, basically 76,000 jobs a month. And we're talking about almost half of the jobs that they essentially claimed were out there were truly actually just revised, right? That is so critical for us to take a look at because it's the largest downward trend that was essentially revised on record, clearly showing the labor market being even weaker than we've seen, right? The last two BLS reports came in showing quite a little bit of jobs that were essentially quote unquote created. We've always seen kind of in line with the ADP report, private payroll. That's what I've seen be a little bit more realistic on the numbers, on the data. And, this just comes really right in line to essentially where the market has been playing out and truly even further cracks of where we're at, right? Jobless claims actually jumped up. Remember, this is tracked week over week. 27,000 jobless claims, highest since 2021, right? Again, clearly showing even more signs that there are people who are actually now, aside from just continuing claims of almost 2 million, we're at 1.939 million people who are having a hard time after they are let go of going and finding another job. It's still even worse than that, right? Where now we're actually seeing new continuing jobless claims. Remember, a lot of this stuff is unfortunate that people are obviously losing their jobs, things of that nature. But remember, these are kind of the things that we want if we want to continue on this downward trend of interest rates continuing to drop and obviously inflation pretty much staying subsided. We know the Fed is going to meet this week starting on the 16th. We'll get updates on the 17th of their numbers. We know almost 100% that the Fed is going to cut. Now, the big part is going to be their dot plot, right? We get that quarterly. Dot plot is essentially what is going to be their expectation heading into the end of the year. They'll meet again in December, but what is each Fed chair's position? Are they in agreement that we need to cut more than once? Is it twice? Is it three times? Of course, inflation and employment is going to be a major role in this. But, if you asked just a month ago, what was it going to be? I think we're at like a 60% likelihood. Obviously, the last two data readings when it came to employment and inflation clearly showed that, hey, the market's not as strong as you think it is. Okay. And of course, that has kind of come into it. Of course, we got CPI last week, kind of just in line, right? 2.9% on the expectations. We know that it's only this is the part that we really need to kind of keep an eye out for, right? Because if the Fed does indeed cut in 2 days, the major part is going to be how is this going to heat up the market, right? We're in this business for the long haul, right? Interest rates are dropping. A lot of our consumers are obviously taking advantage of that from a refinance perspective, whether it's dropping their rate or simply doing cash out refinances. But the biggest part is going to be if the Fed indeed does cut and they cut more than once, is that going to be a driving force for inflation? Is inflation now going to be, we've been pretty consistent, as you can kind of see here, slowly seeing a little bit of an uptick here. So we want to keep an eye on that because the last thing we want is obviously the Fed cutting, people going and now starting to spend more money. And then we're going to kind of go back to where we were in 22, 23 with inflation on a rise and have a bigger problem on our hand. Okay. Now, on the other side, right, we look at PPI report, which measures the wholesale side of inflation. That also actually dipped 0.1%. This is obviously a good thing because, again, those are things that we need to keep an eye out for from a wholesale level. Obviously, the costs on the wholesale level will eventually get passed down to the consumers. So that kind of came in, again, at 2.8% on the annual core side. Important for us to look at. Now, home price. We continuously still see home values continue to appreciate. Of course, it's going to be different on hyperlocal areas, right? Some areas like in the Southeast, Florida, Texas, California, obviously maybe a slightly different narrative, although we're here at our leadership conference, and I think that narrative is slowly changing as well. Obviously, as interest rates continue to drop, we're going to see home values start to go up, right? It's exactly what happened during COVID as interest rates dropped to fours and threes and twos. Home values simultaneously obviously went up. It's going to come down to simple supply and demand. We still have a tight supply of homes, especially here on the East Coast. And then, of course, higher demand will leverage more prices. We're starting to see, depending on the circumstance, but a lot of houses are starting to go above asking, or some houses are starting to go off market very, very quickly. So, of course, that reinforces, again, the ability of obviously home values and them continuing to appreciate, right? And then, just like I said, what we're going to look for this week, tomorrow will be the start of the Fed meeting, their 2-day meeting. We are see obviously the big decision. Like I said, they're more than likely going to cut, but the main part, like I said, is going to be what is their dot plot, right? How many times do we expect there to be any potential future rate cuts, right? And then we'll get some updates tomorrow on home builder confidence. That's a key component too, right? Because of course, just as quick as demand starts to heat up, is supply going to simultaneously also kick in, right? We've been seeing a little bit of an uptick on permits and completion, but we really want to kind of see what is the builder sentiment, right? They measure it on a component of 50 being essentially neutral. And we've been for the last few months, right? Obviously under that, which is expected, right? As interest rates remained elevated, could the slight dip on interest rates be a major portion as to where we start seeing, obviously, interest rates start to go down? Will permits start to go up? Will completions start to go up? Could supply slowly start to tick up, obviously, in our favor? And a big part to retail sales figures, that has been a little bit of a market mover as well. How are people still spending their money on the retail side? And then, of course, your typical weekly jobless claims numbers as well. Okay. A lot of different things for us to take a look at. Doing a quick little recap for us right over here, we will basically see, as I had mentioned, a job market, of course, starting to slow down, inflation simultaneously starting to really meet expectations. Job growth, as I mentioned, on the QCE side, right, revising by just shy of almost 1 million jobs. Jobless claims jump into a 4-year high. Important for us to take a look at that component, because if consumers are not only getting let go, but also having a hard time of continuing to get jobless claims, that's important for us to look at. And obviously, we spoke on the CPI, Consumer Price Index. That's a really big component, right? We don't want a temporary build up on the market when it comes to interest rates, and then we will simultaneously see inflation start to tick up. We don't want to make that mistake. So a lot of good things that are happening for us. So hopefully we continue on this claim. Obviously, keep an eye out for some of our videos. We will continue keeping you guys updated. And if I don't talk to you guys, have a blessed week. Let's make it happen.